that there are three big products that we are transporting. It's the LPG, which has been our bread and butter for many years, but which is a diminishing part of our business because it goes mainly now long haul on the bigger ships. So petrochemicals is the important one. It's where we make most of our money, and this is where ethylene going out of particularly our Morgan's Point terminal in Texas to China and Europe, that's our biggest and most important business. And then the third one is ammonia, which is also an important business and one that has grown quite a bit after the war in Ukraine, where Europe now gets the majority of their ammonia from North America and also to some extent from the Middle East and no longer from Russia. So that has given us some extra work to do. So those are really the three big, most important business areas for us. And it's an advantage, of course, for us that we can switch between those commodities. So if one is weak, then we can use our ships for some of the others. But again, once you start peeling the onion, there's a lot of complexity underneath those headlines. The outlook for our business is quite good and quite different in that basically two reasons why our outlook is different and better. The first one is that there are very few new handy-sized vessels that get delivered over the next 3 years. There are only 7 ships in the order book, so it's very little. Keep in mind also that about 25 or let's say 20% of the total number of handy-sized vessels in the world, they are now more than 20 years of age. That means that they're getting to the end of their lifetime in international trading, our market. So that means that the supply visibility is great for our business. So that's a one factor. And then we turn to the demand side. And here we see that the US natural gas liquids production is growing nicely. It's gas being produced from the Permian Basin. More resilience in our earnings compared to, let's say, the VLGC market, that we don't see those super high rates either, but we also don't see that they've just dropped through the floor in our business. We have historically always been EBITDA positive and even at the worst of times. And this diversity with the terminal and bigger part of the supply chain, and also the diversity between the different cargo types that we're transporting, that helps too. And lastly, of course, that we have time charter cover for about half of our fleet. So those are renewed annually, and that gives, of course, great visibility in our earnings. Instrumental in terms of export, providing long-haul ethylene transportation, simply because it's by far the largest export terminal in the world. It's pretty much the only export. There's a smaller terminal, so in the Houston area, is maybe 5% compared to the 95% that comes out of Morgan's Point. So in that sense, our 50-50 joint venture with Enterprise Morgan's Point Terminal, that is the market for export out of North America for ethylene. It is the market for long-haul ethylene transportation.
So we agreed to this back in 2017. First cargo right around late 2019. Then you had COVID. So you had some intermittent cargoes throughout 2020. Then 21, we talked about before the call started, the whole Texas freeze, and that upset operations for probably 6 months, the whole first half of 21. But then probably mid to late 21 till today, it's been humming along very nicely. We did almost nameplate capacity of 1 million tons in 2022. We're going to be very close to that again in 2023. 2024 starting strong. There's a lot of benefits for the project. For us, it's also, we want to be port through port. So not just the shipping component, but the export side and the import side eventually on terminals there. So obviously it provides additional cargoes to ships. Frankly, an opportunity for a crude export terminal that came up recently here in the US Gulf. And the project looked great, but it doesn't help our shipping component. Respectfully declined, obviously. But if it's a commodity that we ship, it makes a lot of sense because it either pushes cargoes onto our ships from an export side, or if it's an import terminal, it pulls cargoes from our ships. Secondly, it gives us a lot of visibility. We get the nominations for the offtake of the cargoes about 6 weeks in advance. So we pretty much know who's taking the cargoes, how much they're taking per cargo. It ranges from 6,000 to 12,000 tons on average. And then where they're likely going and when they're taking it, right? So we can position our fleet accordingly. So there's many benefits to it. And then last but not least, certainly on the earning stability side, with these medium term, some long-term take or pay agreements, right? The contracts that smooths out kind of the earnings volatility. We have a great foresight for what the earnings will be. And obviously there's
on land, marine infrastructure there with the tanks, the pipes. So we see ourselves taking part both, could be on land, but also for building the ships to transport that new blue and green ammonia that will be produced. Mind you that today ammonia is only used for fertilizer pretty much. Going forward, it will be an energy carrier, which can be used for both power plants in Europe, for coal power plants in Japan and Korea to bring down their emissions footprint, but also as a fuel for vessels. So there'll be millions of tons for new applications, and it'll be an entirely new market. We will participate in this, and we think there are tremendous opportunities, not least because there's probably no other shipping company in the world that has as many ships as we do transporting ammonia today, 9 or 10 ships. So we have a deep standing of ammonia, and we've had that for many years. So we look forward to that. We love the production in Texas because it's becoming more gassy, which is good for what we're producing, and it's also wet gas that comes out. That means that it's not only methane or that becomes LNG. It's also some of the other types of gases, all the ones that we transport. So that'll be the ethane, the propane, the butane, and derivatives from those like butadiene, propylene, ethylene. We love that wet gassy energy production in Texas. We have a robust balance sheet, and we've been able to pay down debt over the past couple of years to an extent now where I think that having net debt to EBITDA of around 3 times and a loan to value of 37%, that's a comfortable situation to be in. And it means that we have the capacity to do both capital repatriation. Last year, we did $50 million worth of share buybacks, and we've initiated a capital repatriation policy and program just last year. So you'll see more dividends and share buybacks from Navigator in the past. But the good thing is that we also have the capacity to do investments going forward. We have been quite firm, I think. We're not going to go out and build a big new fleet renewal program on speculation, because we think that the yard prices are a bit rich as it stands right now. We've been much more focusing on trying to consolidate the existing market by buying secondhands. That's what we did last year by buying those 5 from Greater Bay, those ships. At the time when we looked at it, we thought, is this going to be a good deal? And today we know, because already now the value of those ships have gone up significantly, and they've been trading very, very well over the past year, both technically and commercially. Consolidation is a good way to spend our money. And then we are looking also at getting contracts in place with some of our customers, longer contracts against new building. So that could be for CO2, that could be for ammonia carriers, that could be for mid-size ethylene carriers or similar. So we are in active discussions with our customers on growth business for us, but we'll be very stingy when it comes to doing those projects. We want to be sure that it creates value for the shareholders. You think that with longer ton miles, that it's just taking capacity out of the market, and then rates will go up, which is true. But on the other hand, it's also leading to some demand destruction, because if the price is, let's say, 20% higher in China than it is in Houston, there's only room for so much transport cost to make it worthwhile to actually move the cargo. So there is a risk, of course, that if it becomes too expensive to transport it, either because bunker prices are super high or the journey is becoming much, much longer, less of those cargoes are going to move. So for us, it's not like a huge positive to see it. We would actually quite like to see Panama Canal opens up for us as well, so we can restore good trading pattern, because we think that the supply-demand situation in itself, without the Panama disruption, pretty good already.
Let me say this real quick. I'll speak on behalf of Mods as well. We both joined in 2022. And this isn't to see the stock go from 10 to 16, right? This is a much longer term, higher numbers that we have in mind.